Hello, Maverick traders. Welcome out to your market roundup, October 16th. Corey here with you. Nice to see all of you. Let's jump into it. So, as per usual, we're going to talk about what meaningful news is out. Right now, all eyes are on the Israel-Palestine situation. The next steps there. There was an evacuation order. What are the dominoes that fall? That's certainly going to move commodity markets. And then we're going to look at the markets internally, look at the S&P, look at the Dow, look at the NASDAQ, and then we'll highlight potential trade ideas. For the last couple of weeks, we've focused on a few different ideas, maybe a little bit more bearishly a few weeks back, a little bit more bullishly the last couple of weeks, and we'll continue to try to highlight the next best opportunities.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So as we dig into the markets, very, very impressive price action, up about 1% across the board. The Russell 2000 up 1.6. Oil and gold gave a little bit back, but they've been on a nice run higher, as we know. The NASDAQ has now recaptured the 50-day moving average. The S&P has not done so yet, so that speaks to tech has once again reestablished a little bit of an advance, a little bit of relative strength compared to other sectors. And then, like I said, there was a Gaza evacuation order from Israel. What are the next phases of this war? Who else gets involved? Those are big question marks for the market. And apparently, Inigo Montoya or somebody else is, I thought that was kind of humorous to leave that in there. I'm not sure why that's such breaking news that the Princess Bride actor is protesting. There's a lot of others protesting as well, but that was kind of funny. Advanced decline line, about 70% of stocks going up today, and the 50-period moving average continues to improve. We now have 1/4 of stocks back above the 50 MA, and if you've been watching the trend the last few weeks, that continues to improve, market breadth improving, more stocks starting to recover, but we're still in that bear trend. We're still 3/4 of stocks below the 50 MA, so we don't want to lose sight of that big picture. Currently, we're in a bearish correction, meaning we're rallying, but we're still in a little bit more bearish market environment technically. As we look at the markets here a little more closely, you can see the S&P had been in this triangular pattern that we had highlighted back here. It broke sharply to the downside and the floodgates opened up. It's not uncommon to retrace back some of the steps. And the big thing for me was this reversal on Friday was impressive. And I certainly would have thought, okay, we'll have a nice correction. And then war broke out, and this Monday that followed, the war broke out that weekend. And I mentioned this, I do the Monday market roundups, and we did a market roundup that day, and I said, look, this is a market tell. If you said this catastrophic event occurred and the markets finished positive on the day, look at that recovery, small gap down, finished positive on the day, the markets are shaking that off, there's more room to go, and I continue to think that that is what has played out in essence, is that there's continued to be more buying than selling, and we need to pay attention to these market signals. So we haven't gone massively higher, but if you look at the NASDAQ, it's even more pronounced. That reversal, the small gap down, and we continue to work our way higher. A little dip here, and we're trying to rebound. Now, the next phase of this, if we're going to have a real bull market, we would have to clear these levels of resistance, and the NASDAQ's already up at the downtrend line. So do we stay or do we go? Now, I would be very cautious about doing much of anything here in terms of sticking my neck out. I think you can play a little wait and see. If we go and break sharply up through this, that's very bullish. I suspect that we're marching and marking a little bit of time, and that ultimately we're going to fail at these levels and head back to these lows. I think the downtrend is still intact, but we're at that pivotal spot. Draw your downtrend lines, especially in the NASDAQ, which is already there. See if we can break through. If we do, and it sustains above that downtrend line, then give credit where credit is due. And just because you feel negative, just because you feel bearish, just because you think there's a lot of bad news, doesn't mean stocks have to go down. Important to understand that point. A lot more green than red, of course. We're right in the heart of earnings season, so a lot of these companies are going to be reporting earnings, and there's a couple of trends that we're seeing so far. First, most companies are beating on earnings. Second, most companies are taking down future guidance. So in other words, they're beating the numbers, but they're saying, hey, we're going to be a little cautious. We're a little skeptical about some of the numbers and expectations going forward, and we're seeing that across various sectors. So you can see a little bit of strength here in a few of the healthcare names that had been beaten down. You can see large cap tech still performing, Amazon, Tesla, Meta, Google. I mean, all these different names pretty much in the green. If we were looking for some underperforming areas, you might say, well, there's a little bit up here in healthcare as well, and a little bit here in financials that lagged. Now, some possible ideas. I'm going to remove, this is the last week I'm going to have XLE in here on the neutral side. And I've had it here for a few weeks. When we first highlighted this as a neutral sector, the energy sector, XLE was right around 90 per share. Fast forward about a month and it's still at 90. And I've kept that in this neutral area the entire time. We kind of popped above, we kind of broke below, but we're just gravitating there. I think that trade is now played out. So if you played along and you played energy sideways, that worked out wonderfully well. At this point, time to move on. Let's talk about some trades. So Palantir, here I think we could be in the process of a big cup pattern. So a big drop, and you could call that a double bottom if you want, but basically we drop and we stop dropping, and now we're starting to work our way back up. And where do I think this is going? I think it's going back up to resistance here around 20 or so. So it's a very compelling risk to reward, 17 to 20. Now the way you could trade this could just be a call spread, buying a bull call spread. And if we drop the risk graph, what I was looking at was something like a November 17th, which is the November monthly expiration, something like a 1720 bull call spread. And the way that that would look is you're risking about $100 to make about $200. So our risk graph would look like this: 100 at risk, 200 of reward, reward larger than risk. And the prices on this, 17 or lower would be your max loss point. So anything below that is a loss. 18 were at break even. 19 were profitable. 20 were max profitable. And anything above 20 were still max profitability. So it gives you that risk graph where you can only lose $100. You can make $200 per spread and 2-to-1 reward to risk ratio. And I think kind of a reasonable type of outlook. But anyway, Palantir, trading it as a call spread, something along those lines. That's what I was looking at. Even a call butterfly. Call butterfly a little bit more advanced, but that's actually a trade I triggered into today. 17-20-23 call butterfly in November. Take Two Interactive, you can see the bullish retracement, came back, held at the prior level at these moving averages, and now we might just be continuing to go sideways, but I think Take Two could be an interesting trade for more upside as well. It's a little bit of the same. I'm looking for stocks that are coming out of these downward trends, that have established some support, and in both of these cases, kind of a doubly bottom type of pattern. So I like that price action. We're now above the moving averages and pulling back to it. Looks kind of interesting that way. On the more bearish side, or pardon me, on the neutral side, we've had XLE. Now 90 has been our level, and we first highlighted this right around this level here, going back to mid-September is when we first highlighted it. Now we're in mid-October. The stock is unchanged. That's as good a neutral outlook and as good a neutral sector as you could ever hope for. Sure, a stock's not going to perfectly go sideways day after day after day after day, but to get it coming back to that same baseline is exactly the idea behind a neutral trade. So I think that has played out. My guesstimate would be that energy is going to move at this point. I'm not quite sure which way. I could see this breaking out to the upside a bit. I could see this failing and maybe breaking this little short-term downtrend line or uptrend line rather to the downside. I don't know. I could kind of go either way on energy right here, right now, but I do know I expect it to move and not be as neutral as it has been. Amazon on the bearish side, you came up and filled the gap. You've got 20 crossing below the 50, and out of all the large cap tech, Amazon is underperforming, Amazon and Apple. So I would just play this as weaker than the rest of the group. If you're going to bet against tech, this is the place to do it. Now, I don't have a lot of big bets against tech, but I'm considering Amazon. I'm looking at that one as a consideration. Here is a semiconductor company, and it has come up to that resistance, that old breakdown spot, and rolled over. And again, I would expect underperformance in STM. Now, the reason I'm a little bit more focused on tech today is it might not make sense to you. You say, well, tech has done pretty well. Yeah, but the NASDAQ's now back at that downtrend line. The NASDAQ rolling over would be trouble for the broader markets, right? It's been the leadership group, and if it gives up what it's recently gained, we got a problem. And as Apple and Amazon and Google and these big stocks go, so goes the market. So I think it's an area that we can isolate and becomes interesting for possible failure at current levels. I don't have much of anything, again, bearishly in tech because it's been such a good performer. So I wanted to kind of focus on that group a little bit more today for some possibilities. Markets are in an upside correction. Precious metals, gold has been on a tear. Oil, we know, has been on a tear. I think that commodities can outperform. Powell speaks on Thursday. That could be a market mover. And then again, we're in earnings season. So American Express, Bank of America, Johnson & Johnson, Netflix, Schlumberger, Tesla, UNP, the railroad company. There's plenty to keep us busy. Hope you enjoyed today's market roundup. Have a great rest of your day. We'll see you next time.